Hello, this is Ronald with Indicator Vault, and we've got another video here. And in this one, we're going to go over the Parabolic SAR. And SAR stands for Stop and Reversal. You can just find it under the trend indicators right here. And the settings for it are not complicated. It's just the step and the maximum. For this example, we'll leave them on the default settings. You see here, this is what they are in the form of these dots above and below price. And just like the category suggests, it is a momentum and trend-based indicator. And there's, a formula. What's interesting about this is the formula for the dots above price and the formula for the dots below price are actually different formulas, just slight variations. We're not going to go into that, but it's just, interesting to note. However, you can pretty much use them for the exact same ways of trading. Some will use them as either entry points or trailing stop losses. For instance, let's say you got into a trade here and you can use it as a trailing stop loss for each dot. If you're catching the move down, the momentum, until one of them gets broken or pierced through, that's one way to incorporate this. However, I'm going to go into just some kind of other tips and tricks to use this with, either some supply and demand thinking, and other simple stuff like moving average and, confluence with other things. So one way I view the Parabolic SAR, PSAR, as, there's things to take note of. One, the length of the trend. You can see here the number of dots, and then forms here just 3 dots. And then immediately another longer trend underneath here. Now, there's always going to be dots under price. Every candle that forms is going to have a dot under it. And so it's always going to be forming above or below price, depending on where it is touching and where it is trending. So one way I like to use it is, since I'm very much supply and demand, is confirming specific supply and demand zones. So for instance, we see it kind of trending up here, not being broken. If my bias is bearish and I'm now thinking that this is just a retracement, which it obviously was, we can see prices continue down strongly. I wouldn't want to necessarily believe price is now bearish just because it poked below this one. I want to see a close below the most recent dot, the most recent move up. And again here, this is just poking above it, not closing above it. But here finally we see price close below it. And so there's a couple things here. One, the most prime zone in my mind is that supply zone there. Let me actually zoom in. This is what's responsible for the break of this one. So even though we haven't seen price retrace back up into it, in my mind, this is now a valid supply zone. This is the one that has caused the reason to break this one. And it is, noteworthy to see the separation of the dots and the length of the trend. So for instance, with this one just being 3 dots, I would not really take that into account as, for instance, validating this demand if it just broke above these 3. With a much more significant move here being broken, this is now validating this supply zone in my eyes. So I'm seeing that as this retracement is over and the trend is continuing down, which obviously in hindsight we can see that it has. And just glancing, taking that into account, just glancing at something like this, we see this engulfing candle break through these. We do see it here, but like I said, just 3 dots, 2, 3, 4 dots. Is just not much of a move in my mind to take notice of when price is broken above it. This is much more significant, obviously a much stronger candle, and ultimately we can see price does retrace into this demand area right here, continues up for a little over 100 pips, but again, this is where bias also needs to come into play, and so there's a reason why this demand did not create another higher high, because price is overall bearish. But you could have taken that trade, up another 100 pips just from this simple confirmation. Again, price is just kind of messy in here. Seeing how it's broken here is just not much confirmation. But we want to take note of this kind of confirmation right here with these 2 longer ones now being broken, which, in my mind, has shown signs of the bearishness continuing. Now, with also this, I want to point out, like I said before, you want to note the separation of the dots. As price is strongly moving up, in this case on the British pound, Japanese yen, we see the dots getting more and more separated. This move here, not so much this move here, a little bit right here, but there's something in price, kind of a 3 drives pattern, where a trend typically, if price is going to have 3 strong pushes in one direction, more than likely the 4th is not going to be that strong, and you will actually start to see price start to reverse after 3 strong pushes. And the SAR here, in my opinion, is a great indicator to kind of gauge that. And so here on the 5-minute chart, we can see that. So we see the down move here, not much separation. It's staying fairly close. But what do we have here? A strong up move, where now you're starting to see some separation. Again, just 2 dots, not significant in my mind. So we've got one move here, right here. Impulse leg 1. Got some dots here, kind of pushing down, but very close together, right? And then what we have here, second impulse move, right up here. Lots of separation in the dots here. It retraces some, but you can see, only these couple here have a little bit of separation, but for the most part, it's just a steady move down. And so what's the last move here? Another strong move, a 3rd move up. And like I mentioned before, not as much separation as these 2, but we can see some here. And then even the dots above price, look, the 2 was at 4, These are not significant. So after seeing this, 1 move, 2 move, 3 moves up, it's easy, and bias would be kind of confirming that we're going to see a large retracement, not a retracement like this. We do see one after the second impulse leg up, but a large retracement and after the 3 strong pushes to the upside. And keeping that in mind, what I always like to look for after 3 clear pushes up, if price is going to retrace, it's going to at least take out the last impulse leg right here. It starts here. Obviously, we can see price pushes strong below it. And typically, I would aim for the middle point of the second leg, which would be something about here. You can see price easily gets to it, 50% mark, and even more so below it. So that's just some ways I view the PSAR, kind of gauging impulse moves, and keeping them in mind, especially when I see a very clear 3 drives pattern. It's telling me price is exhausted. With the separation, price needs to take a breath and come back down and retrace. And also, like I pointed out in the Euro chart here, validating supply and demand areas with breaks above significant moves. So I hope that helped. That's the parabolic stop and reverse indicator. And until next time, best of luck trading.